Hey Mark, great to have you on a day like this. We should see the dollar weakening dramatically. Uh, are we going to 120 euro mark? Is that a
Think so,
target
but
of yours?
not it's not going to happen today, of course. I think that look, at the end of the day, the CPI is more important than the PPI. And we got to remember that even though it's called producer prices, there are some things, of course, that impact the PCE deflator, which despite all the media talking about it as the CPI or the core PCE deflator being the Fed's so-called preferred measure, the Fed targets headline PCE deflator. And the CPI and the PPI feed into that. And so, yeah, I think we saw the headline reaction to the softer than expected PPI and, of course, a downward revision. But we still are looking at an uptick in the CPI tomorrow. I think it'll be the fourth month in a row that we get the headline increase in the CPI. And so, I hear what you guys are saying about what the Fed can do, but the market is pricing in, say, a 1 in 8 chance or so of a 50 basis point cut next week. I think that's a bit exaggerated. And so I was looking for between today and tomorrow's CPI for U.S. interest rates to back up a little bit. Is a 10-year really going to go through 4%? I don't think
That's a
so.
question. That's a question that we were asking. 4%, and there are some Elliott targets there that our Elliottician has down there at 4 to complete this whole thing, and that rates could start heading up from these levels. Is that what you're talking about?
I don't know about how much rates are going to go up. I mean, it seems to me clear that the labor market is a key for consumption. It's really a driver for the economy. And so I'm not sure that rates will be backing up that much, but I do think that the pendulum of market sentiment, I think, has swung maybe too hard towards this 50 basis point rate cut and these low rates right now. I think we need to see some more data, real sector data to really get a convincing break of 4%. And the reason I say 4% is because I think what are we really playing for? And think about the risk reward. If we're at 408 now, more or less, are we playing for 8 basis points to the downside? Is that what there's left? Versus say
Yeah.
10 to 15 to the upside. So to me, the risk reward doesn't really pay to be playing for lower yields at these levels.
Okay.
And you can also see the dollar. I mean, even though the dollar pulled back on the PPI headline, we're not really seeing a trending day yet, right? We're really just consolidating. And I'd be looking at, you know, that we take maybe even an inside day today. I think people are a bit confused. I think positions are already playing for not only the CPI and the and next week's Fed meeting. But I think, look at what happened. I mean, I think someone mentioned it earlier about the Poland shooting down Russian drones. There's talk that Poland might try to invoke the article of NATO for mutual defense. I don't think that comes to pass. But I think in that uncertain environment, geopolitical tensions, let alone what happened with Israel yesterday and Qatar. I'm not so sure that we're going to get a big move lower in the dollar.
Okay. Yeah, because a lot of people, are in the camp, Mark, that the low we had a month or so ago down here, a couple of months ago, they're looking for it to be tested or taken out. And, this action, the way you're thinking, this might be accumulation for a second higher low. Is this
Something
off the
like that.
table for you? A
Yeah,
new
I could.
low?
I mean, look, I'm still a big dollar bear, but except in the short run. I think that, like I say, I think the pendulum of market sentiment has just swung a little bit too far. And
Well, you have a lot. Everyone's a big long-term dollar bear. Can you name a long-term dollar bull? Anyone?
And I don't really follow all the calls from
Anybody?
different banks and everything, but I
Yeah.
agree. I mean, most people seem to be bearish the dollar. It seems like market positions accordingly. But like I say, I think that more reasonable when you think about what's going on in the world. I think that we could see still a little bit move higher in the dollar, maybe squeeze out some of momentum traders, some trend followers. We squeeze the dollar higher before it comes back off.
Okay. So if you're thinking about that, you'd probably be buying. You have a favorite fiat? the action I've been looking at is that the Aussie has been showing more relative strength. The commodity currencies have been acting better um, than, for example, cable
Yeah, no,
and even the euro lately. So
yeah. So,
it's
so here's how I sort of think about it. I really think that the capital markets are more important than the markets for goods and services. I mean, think about it. The foreign exchange market, average daily turnover is something like $7.5 trillion. In 1 week, we do more in the foreign exchange market than global trade in a year. And so
yeah,
I really focus, and I know there's a tendency, I think, for a lot of high frequency foreign exchange traders to go for whatever the shiny object of the day is. And I find that for what I do, of course, like Blake said, there's many ways to make money. But in what I do, I try to focus on the signal. And I think the signal for the dollar comes from US interest rates. I know macroeconomic theory is going to tell us that it's about the interest rate differentials. But
yeah,
most of the time, like on dollar yen, the correlation between dollar yen movement and the changes in the 10-year yield are not only higher, more robust correlation than there is with the spread or Japanese interest rates for that matter. And when it comes to the euro, which of course drives the dollar index often, I look at the 2-year interest rate differential between the US and Germany. And we're
mm,
at basically the lows for the year. And so that's why I'm overall negative the dollar. I think that, while the Fed's been sitting pat this year, other countries have been cutting interest rates. Most countries outside, thinking of the G10 countries, are almost done cutting interest rates. There might be another one from the ECB, one or two from the Bank of Canada. Some people are even talking that the RBA is done. So when I think about the dollar block or what you call those commodity currencies, I don't really see it like commodity currencies because that gets me focused again on trade and I want to focus on the capital markets. And what I find happens is when the dollar is weak, the Canadian dollar tends to be a laggard. In July, when the dollar bounced, the Canadian dollar was the strongest of the G10 currencies. And so, what I,
okay,
I, I typically then try to really focus on playing these underlying relationships. And of course, on the Weather Channel, it was saying that there's an 80% chance it rains. So I bring my umbrella. If it doesn't rain, the weather person really wasn't wrong. 80% correlation is not 100% correlation. So
right,
you've got to
exactly.
allow some deviation.
Okay, all right.
And I
So
see the euro, as we're speaking, Dale, the euro is back flat on the day. It's
yeah,
given up basically everything it gained on the PPI.
yeah. I mean the way the dollar closed Friday and what it's doing now, I think is, the people are going to start getting long. Maybe one more low, but I'm kind of with you that I think there are just too many dollar bears right here. And I don't know if this was enough to shake them out. In fact, this encouraged dollar bears because it technically was only three waves, right, Mark? So, all the eliticians go, well, that's a bear market rally. We should see new lows, but it's sure taking its time. It's sure, everything seems to be ranging right now. K-Man talks about we have ranges in the dollar. Really, the euro's been a range for quite some time. What's going to take us out of the range, or should we just get used to trading the range?
And of course, instead of rangers are like friends. It's your friend until it stabs you in the back. And so, yeah, and the rangers, I think, are only interesting at the extremes. And so for me, like the extreme now on the euro is about 116.50. There's a lot of options that expire there as well. And so I think
Okay,
if we could take out 116.50 on the euro, I think that'll squeeze out some of the late longs.
okay, all right, interesting. You bring up uh, what's happening with Poland, and it does seem like things are continue to accelerate over there. Could the interest rate differentials and a lot of the fundamentals you look at be thrown over the side of the boat if the war in Europe expands because the ocean between us and Europe is going to make the dollar attractive again?
Yeah, I
Would
mean,
that
I do.
trump it? Would that trump it? all the economic fundamentals?
If the war really spreads, yes, I suspect that neither the U.S. nor Europe, nor Russia for that matter, really wants the war to expand. I mean, you look what's happened since the summit between Trump and Putin. Uh, there was no retaliation from the U.S. as Trump had threatened, and Russia seems to have gotten more vicious and deeper
Right,
attacks on Ukraine. And
right.
so, what I think is really going on here, it's kind of interesting. I think that the things that Panama, Greenland, and I talk about Canada as a state of the U.S., what they have in common, I think, is the U.S. recognizes, even if it's not articulate about this, recognizes that it's no longer the top dog economy. That is the most efficient economy, like we were for the past century or so. The US is adopting what I think is spheres of influence. This is a classic, like 19th, 18th century type of world organization. The new national security strategy that was already been like leaked a little bit to the press has the US changing its focus towards what it calls the homeland. That's about the National Guard in Washington and the Western Hemisphere. And if the US is going to grab its sphere of influence, like the old Monroe Doctrine, it means that we're
Yeah,
going to be less likely to spend lives or money stopping another great power like Russia or China from grabbing their sphere of influence. And I think capitals around the world are nervous about this. Look what happened to South Korea. They agreed to build a fabrication plant in the U.S., and we raid them for what
yeah.
seems to be common uh, sort of violations. So it is breaking the law, perhaps. It's yet to be proven, but there might be some violations. But we come down to chaining these people up, and I think this is, if I was in Taipei, the capital of Taiwan, I'd be scared about the way the U.S. is treating Ukraine and its other allies. Some people say that, this idea in the press that Trump wants to get the Nobel Peace Prize. Well, look at what he's been able to do. He's been able to get India and China, which have fought each other at the borders within the last several years. He's gotten them to be having to be holding hands again. That's what the Nobel Peace Prize should be for.
Interesting. Okay, so uh, basically isolationism and
Yeah,
throwing our weight around in this hemisphere.
yeah, no,
Is
I don't
that
think it's
is that it?
isolationism. I think that isolationism is a misnomer. I mean, look at
Okay.
what we just did to Venezuela.
Yeah, that wasn't.
I
Yeah.
mean, I think what it is unilateralism. And this is what happened after World War I, when the wing of the Republicans, which Trump now represents, blocked the joining of the League of Nations. It wasn't because we wanted to be isolationists, despite what some historians call that period, but it was we wanted to be unilateralists. We didn't want to be stopped by a group of other countries. If you're the top dog country, you got the strongest military in the world, why would you want to leave it to what other countries say?
Okay. Got it. So that's it. We're the big kid on the block in our neighborhood. Not the world is not our neighborhood anymore.
I think so. I think that that's what I think by the spheres of influence. And I think it's a belated recognition that the U.S. is that we're not where we were either when the Berlin Wall fell or where we were in the early 1900s.
Okay. There is talk that Europe is doing everything to avoid a peace deal and that they actually are moving towards war. They're building bomb shelters in their countries.
No,
Um,
I get it. I get it. But look how nervous the
what?
U.S. is when China or Russia send a ship into the Caribbean. I think that Europe, I mean, think about what happened earlier this year. I think this was really the kiss of death for the euro bearers. Was when the World Economic Forum, the talk coming out of that was Europe was uninvestable. Of course, Europe does. I mean, Europe is afraid that they've given, in effect, Russia Crimea without fighting about it, and now Russia says that's not good enough. We want more of Ukraine. And so, where does that stop? And I think this is the appeasement argument that here in the US, we sort of lose track of because the war seems so far away.
Okay. You following metals at all, Mark? Is this a bull market that just goes on forever in the gold?
Yeah, for the first time, I shouldn't say for the first time, but for the longest period, I've been long gold now. It's been about 6 months. I've been able to ride this, but it's not because I attribute any special meaning to gold as a long-term asset or as some kind of store of value. I look in real terms, it's still below, it still hasn't done great over my lifetime, of our careers in the markets. But I do think that a lot of forces are moving to favor gold. Lower interest rates, the freezing of Russian assets, Russian central bank assets. I think uh, the disruption of emanating from the U.S. now. Uh, I think that scares a lot of people. And so, in many ways, with this euro dollar market, many countries and companies borrow dollars. There's a natural short dollar position out there. So when things go bad, they have to cover their shorts.
Yeah,
It would lift the dollar in this what looks like a flight to safety. But I think that the discretionary part, because if you're going to trade oil, soybeans, semiconductor chips, you most likely have to trade in US dollars. But for the discretionary part, I think countries are trying to avoid the dollar. They just don't understand or know the direction of US policy. And I don't mean Fed policy. I think Fed policy is clear that over the next, whether, we can debate about how much they do in the very short term, but over the next year, we should be expecting about 100 basis points or more of Fed cuts. That's going to be more than the other G10 countries. And so, but I think that people want to diversify a bit away from the dollar. But I was talking with someone else earlier this week, and they asked the AI, what level of gold do we need for the U.S. not to be in debt anymore? Over
okay.
$100,000 an ounce. A ridiculous level. We're not going to see that, right?
Yeah,
But I do think that there's more upside in gold. Partly it's sort of what Keynes taught us, right? Is that the markets are like a beauty contest. It's not to pick who you think is the most beautiful, but to pick who everybody else is going to think is the most beautiful. And right now, I think everybody else thinks gold is the most beautiful. So let's go for the ride.
okay. All right. So, anything on energy and what's happening in the Middle East with Israel? I mean, kind of a very, you know, surprising attack in another sovereign nation um, that happened in Qatar yesterday. You think that's
Yeah,
going to,
I,
what's
I don't really think
happening?
that I don't really think that stuff matters so much. I
Yeah,
think that to me the most important thing that's happened in the crude market is that OPEC and their allies have changed course. And now they are trying to compete for market share, which partly means driving the price down. And we're already seeing some signs of U.S. investment in the oil patch slowing. We're already seeing
yeah.
some people suspect peak shale is behind us. And so, to me, that's the key is that the changing tactics of Saudi Arabia and OPEC to go for market share, which means more production, lower prices.
Okay. So we've covered really a lot of the board. What are you doing lately, Mark, for your customers? What are you telling them as far as dollar exposure? Do you have is the euro your favorite long fiat currency against the dollar or any other currency?
It's a funny thing that you ask this because I think that, many people think, and these kind of questions sort of encourage this idea that the foreign exchange market is a bunch of people like us, short-term speculators. When the market is not just that. And most of my clients are corporations. They
Right,
don't want what you think is the best trade is. They want to be
right,
helped in managing the exposure, managing the risk. I mean, you think of what happens, the volatility. We talk about floating exchange rates, and we made this necessity a virtue. But floating exchange rates mean volatile exchange rates. You think about what the average profit margin is for a small or medium-sized business. Well, the currency market can eat it away. And so corporations are typically hedging in the foreign exchange market. And so our clients typically have relatively, on both sides of the market, Canada, Mexico, and the euro. more interest in China these days. And one of the things that's happened, and when the dollar was in this big bull market, U.S. Importers uh, were, were paying their suppliers in U.S. dollars, and those exporters, those foreign exporters, were happy to accept the dollar as an appreciating currency. That's changed. As you know, the dollar really fell apart in the first half
Yes,
this year, and so a
right.
lot of foreign producers want to get paid in something other than dollars. And so our small, medium-sized businesses, corporate America, is having to sort of reassess which currency they're going to be paying in, and that requires a hedging program, which is really also why I think that most corporates are not going to have Bitcoin or crypto in the reserves. You think about the job is of a corporate treasurer, manage risk. If you're going to take on in the treasuries department crypto, now you're taking on another risk. We can consider currency risk just for the sake of the argument. I still doubt whether it's really currencies we're talking about here, but they won't take on crypto because it takes on a new risk, and their job is to minimize risk. Neither their liabilities, what they have to pay, nor their receivables, what they're going to be getting, is going to be in crypto. And so, why would they want to have crypto on their books?
Okay. Do you understand this whole stablecoin thing that's going down?
Understand it. I don't know. I'm a bit bewildered by the use case for it. I see if people want to take money out of the U.S., like say Mexican workers who work in the U.S. and send money back home, worker remittances is a big part of the capital inflows into Mexico. But for Americans, I mean, in many ways, I think that you think about this foreign exchange market. I said $7.5 trillion a day. It's all done digitally. It's not like someone it's not like Deutsche Bank owes Citibank 100 million euros and they're going to be bringing over a suitcase of euros. These are accounting functions. They shift on your ledger. So I think that in many ways, we're already in a digital world. And I'm not
Yeah.
sure. I mean, I see though that the stable coin, some of the large players there have a lot of treasuries, and they're as large as maybe even larger than some hedge funds. This is a new source of demand for treasuries. But I worry about the other side of it. As money flows into stable coins, or that kind of thing that drains money from the banking system. And this is an important point. On Monday, the 15th is the tax date. We're already seeing some pressures in the money markets rise. Look at SOFR, which is, I think, almost its highest level since early July. We've got
How about the repo markets had a couple of incidences of kind of running dry on cash, and people have had to go the window.
Yeah, well, I think we'll see that when we get the Thursday Fed statement. But in general, I think that the pressure, whether it's because of the tax date, we're seeing the use of the reverse repo, which is where money has been like stocked away, extra reserves. I think that we're reaching a point where it wouldn't surprise me next week. Not only does the Fed cut rates 25 basis points, update its the dot plot, the summary of economic projections, but also it has to say something, I think, about QT. Remember, this is what's happening. The Fed is letting bonds roll off, mature without fully
Right.
replacing them. That is also a drain on reserves. And so I worry that in the next, starting as soon as Monday, we could see, if not a repeat of 2019, September 2019, we could see pressure grow in the money markets, which would drive up interest rates, and in turn, I think supports this
The
near-term
dollar.
bullish outlook for the dollar.
Okay. Definitely a voice, Mark, that we needed to hear today with everyone talking about the death of the dollar right here, and that it was a layup for new lows, and I think that's the way the market's positioned. So if it turns into something, there's sure a lot of dollar bears to be squeezed, aren't there?
Yeah, so I think that, I might have said this before, but I think that in my experience, people who make money in the markets aren't right more often. And I think that's partly your point earlier, dear, when you talked about how you can take money out of I forgot whether it was the euro or the S&Ps. You said that you were
Yeah,
against the daily trend, but you took money out intraday, which speaks to your
right.
trading prowess. But I think that the way people make money in the market is not being right more often, but risk management. I've seen
Yeah,
professional traders, amateur traders, myself included, make a little money, make a little money, lose a lot of money. Make a little money, make a little money, lose a lot of money. And we've got to be better risk managers if we're really going to
yeah,
make money. And it's not necessarily, I mean, of course, we're going to be wrong a lot. I tell my
yeah,
wife I'm going to be wrong half the time today. It's still going to be a good day. And that's
yeah.
because admitting you're wrong, you have conviction, but admit you're wrong and don't get like married or put your ego into the trade.
Okay. And you really do have to admit you're wrong when you're having a discussion with your wife, right?
She's always right.
Yes.
All wives are.
Someone told me, Dale, the best thing to do in a situation like that is look down at your shoes. Have you ever tried that?
No.
All right, give it give it a shot, buddy. Mark, it's a delight talking to you, and really, I think you opened people's ears and eyes to looking at the other side of the market because people are pretty bared up in the dollar, and you have to pick your spots. And I'm so glad you come in every quarter and do a spot with us. I'm glad that we picked each other to, over the years be able to have these conversations. I'm grateful and lots of respect
Still,
from
and
our,
and you really find good days to have me on when it's 'cause like you say, we got to pick our spots for these turning points. To
yeah,
know when the market sentiment is, even if we agree with it, might get too extreme.
maybe it's Providence. I don't think it's luck. Anyway, thank you, Mark. Listen, everyone, this is where you could get Mark's stuff. All right. Go to, not just following him on X, but he has lots of articles and you're not providing anything for retail like any kind of market letter or anything, are you?
No, I post everything on my blog. I've been fortunate. I know a lot of people try to monetize their postings on the internet. I'm fortunate that my bosses let me post it over the years. What I do for my team, I share broadly.
Okay. What good is anything until it's shared with another? So,
Keep secrets.
Mark, have a great rest of the summer and a very good fall season. And we'll be talking when it's dark outside early in the fall sometime. And
Good luck to everybody. We need luck besides hard work.
all right, Mazel Tov. Good luck, everybody. And Mark, it's lucky when you come here and talk to us. So thanks. We appreciate what you provide to the community all these years and that you come in and talk to us personally. Thank you, buddy.
Thank you. Good luck.
Good luck, Mark. And that's a wrap, everyone. Hope you enjoyed it. I always love talking to Mark. Gives you some pretty good perspectives here. Good luck the rest of the day, everybody. We'll see you tomorrow for the CPI. Oh, thanks, Gelsey. And Saloon, congratulations on the melt up continuing. And everyone have a good day and smell the roses too. Don't forget, don't just count your pips, count your blessings. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.